run. Lead the reason markets run. Candles lit, wicks on fire, spread so tight the stakes get higher. Institutional flow, he's the supplier. Positions held till charts retire. Data feeds, news he reads, Fibonacci maps to see. Supply demand his mind exceeds. Trades ignite like lightning speed. Stop loss tight, take profit wide. Leads precision, unmatched drive. Liquidity pools, banks coincide. Retail's blind, leads the guide. Charts unfold, the stories told. Entry bold, accounts in gold. Trade by trade, the wins are sold. Market alchemy, legends mode. Whoa, 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 whoa. Lead the reason markets run. Lead the reason markets run. Lead the reason markets run.
Afternoon, everybody. How are we all doing? Happy Friday, Monday, not Friday, Monday today. How are we all doing? Where's my chat gone? There. Afternoon, Road. How we doing? So yeah, basically it's Monday. We've had Trump decide that he's going to put billions of tariffs on everybody again, and Canada's going to get 100% tariffs, and China's trying to import everything to America via backdoors in Canada. So you might as well take over Canada as well on the way to Greenland. You know, usual stuff, fun. So yeah, we'll see what happens today. The DAX this morning, for those members that were in this morning's stream, absolute textbook today. So as I said this morning, clean break short into previous session low and bounce out, which is exactly what it did. Obviously that was the other area we were looking at. So if you did get that short on, I said watch that area for the bounce, and it really properly bounced today, didn't it? So that was your long entry there on candle 27 today. Yeah, didn't look back. So very, very big move on the DAX. I'm still long on it at the moment, on the ORB long, the 15-minute opening range break. So I'm on that as well. We've got a fairly easy target today. I think there's a good chance today, if we can rally at the open, we might come up and test last week's high, which is 125 ADR, but that's my partial just before ADR today. So we'll see if we get there. But yeah, big moves. So going to trade the NASDAQ this afternoon, see how we go. Markets are obviously already open. Let me just update this chart so we've got the right data. So far today, obviously from last week we are sideways as hell. Market's really stuck on US indices at the minute. Your previous close has already been done today during Globex, so there was no real gap. It was a 6% gap. There's no gap at all. So the statistics today really are we going to reach previous high, which is also last week's high, yesterday's high, session high? It's all yesterday. It's all that lot. Or are we going to break down and fill this gap here? So you've got your downside targets are the previous daily low and session low from Friday. We've got your Globex low today, which tapped pretty much into the session lows. So they're your downside targets today. Plenty of them. Upside, not quite as much. So we'll see where we go today with these at the open. But the markets at the moment, very sideways. There's a massive wick today, look, at the open. So very much indecision again. News-wise at the moment, there's no news today. We've had IFO today for Germany, but that's it. There's no news today. There's no news tomorrow, apart from Trump, obviously. News every day. Main news this week, which we covered in detail this morning in the members stream, is CPI for the Australian dollar, obviously the Canadian interest rate and the US interest rates on Wednesday. No forecast changes there. Don't think we're going to get any. And then going into the back end of the week, we've got PPI and GDP for the CAD. So as far as news trading opportunities this week, I'll be asleep for that. That and the CAD rate are really the only two tradable things this week. But I suspect we'll just get whipsaws because we're going to get normal no change rates on those, I think. So we'll see where we go. There's masses of ADRs and RSIs at the moment. Gold, obviously, we looked at, again, we spent quite a lot of time on gold this morning, analysing that, comparing to Bitcoin, looking at the largest runs in history and what happens after those. So we'll look at, we've looked at all of that this morning, but the other thing that we've got affecting the markets at the moment is the Japanese intervention on Friday. So Japan intervened Friday, as they said they were going to. They've warned again this morning about further intervention. Bank of Japan Money Market suggests Japan did not intervene in FX market on Friday. They say that every time. Rubbish. They always say that. Oh, it wasn't us. Top FX diplomat Mimura, we take appropriate steps on forex according to Japan-US joint statement. Nope, wasn't us. 5 minutes later, we'll intervene. You know, just the usual rumblings out of Japan. It was an intervention. Always is. So, yeah, there we go. So that basically happened on Friday. So all Japanese pairs, I got out of Aussie yen today. Yes, I closed Aussie yen out this morning. I closed out some of my US yen on Friday. I am still holding 3 US yens long at the moment. I'm also in Euro yen long now as well. So that intervention move obviously got continued today. We've got 150 ADR today. So we had a slight gap down and continuation to 150 ADR. So I've got in long on Euro yen, which 0.5 drawdown and break even basically on it. And US yen, I've added another one in this morning. So I'm looking for some kind of pullback, but I think the yen continuation will happen. So you can see we've already hit our weekly range on Euro yen today. It's only halfway through Monday, and we've already done the average weekly range on this thing. Yeah. So average weekly range on Euro yen is 225. We've done 229 today. So obviously on Friday we did 300. So this is obviously a livening up for the Japanese. So I think there's a good chance that this will start a cascade effect, and we'll see the market shocked into retracement. Whether or not the Japanese will intervene further, or whether this is enough to start the market scaling out of the last leg, which is pretty much what's happening now, isn't it? Climb up the stairs, fall down the elevator shaft. We'll have 50% of this undone by the rest of the week, if not before. So there's lots of ADRs to look at, but the vast majority of those are affected by the yen move. So trying to get into these, tricky, and also I wouldn't get in too aggressively. Maybe take one, but don't get in too deep. Gold we looked at this morning. We did a lot of comparison work this morning on this gold move and what it means. And obviously the price of gold above $5,000. 18 months ago, we were trading at $2,000. Yeah, we were trading at $2,000 for years and years. Yeah, going back to 2020, trading at $2,000. 2023, $2,000. Yeah, before that, just under $2,000. $5,000 now. Yeah, this is going to pop. This is a bubble. This is going to burst. Quite when? We're on day 6 now. We had an exhaustion week last week. Largest week we've had. That's it. Full stop. Largest week we've had ever. On gold last week, exhaustion ends with big weeks. That we had a 2-week pullback on that. We've rallied beyond this massive exhaustion move. So something's got to give on this. You can't keep manufacturing components for computers, which have a lot of gold in them, at the prices you want to manufacture them at, if the price of gold is more than twice what it was a year and a half ago. So, this thing's going to come down at some point. There's a lot of people very long on this, that as soon as they get one bear candle in there, they are going to panic and they are going to sell, and that is going to collapse. So I've got shorts on at the minute, 6 of them. No, sorry. 6. Yeah, I have got 6. Yeah, so I've got 6 shorts on gold at the moment. Averaged in at 48.93. So roughly 48.93. So roughly 125 ADR, I think, somewhere like that. Ooh. That's my average, 225 ADR. So I'm averaged in there at the minute. But boom, boom, boom. Yeah. It's going to be big when it goes. When it goes, who knows? But that's a massive move, isn't it? So, RSIs, we looked at RSIs again this morning as well. We got some massive RSIs on these Australian dollars. I think it was Aussie US. 95 Aussie US. So we were looking at the biggest moves ever. Again, we got so many of them at the moment. Yeah, we don't get up to this level on the 4-hour RSI. I mean, it just doesn't happen. Which one was it? Pound odd, that got down to 7. Euro odd. One of these was even further, wasn't it? It's come out of extension now. It must have been Aussie US we were looking at, but we haven't been up at this level. Just haven't been up at this level. Yeah, we had one instance. Long time ago where we actually got there. Yeah. So that was the last time we had extensions of this magnitude on the Australian dollar there. Yeah. You just don't get readings like this. 95s and 5s on the 4-hour RSI. They are rare as rocking horse poo. Chocolate fire guards. Anything that doesn't exist, basically. These sorts of moves are beyond parabolic. And when they break fast, hard, and very, very, very quickly. So we'll see with these. We've got Australian CPI coming up on Wednesday, so we're waiting for a catalyst from the Australians. The CPI number is forecast to go up. Australian dollar and New Zealand dollar are renowned for going completely the opposite way to their news. So if we do get these forecast figures, that might be it. They might just go, we can't buy anymore. There literally is no one else left there that's selling the stuff. Get out. And then it will start that cascade. So doesn't matter what the result of the news is, we're waiting for a catalyst just to drive that volume through the market. It's still pushing today. But obviously the US dollar is obviously collapsing because Trump's breaking the world. So, nobody's going to be buying the dollar, are they? Well, you can if you want, but probably not the best thing to do at the moment. US dollar yen down at 8.8 RSI on the 4-hour. Again, these levels you don't get to very often. If you go back in history, you'll find that the last times you were down at levels like that, or you got to move that fast, was during interventions. Yeah. Get down to these big, strong, low levels when there's intervention moves. That's the last one there, obviously, with the Japanese yen. So, yeah, it's busy, isn't it? It's one of those months, this January is just nuts so far, which is great because it means you can bank lots of money. What we need as traders is market movement. certainly got that. So it's just not necessarily going in the right direction, is it? But anyway, we'll see. That is your 5-minute ORB. So long DAX, NASDAQ. Upside target is that high. So just scroll out and have a look. So there is your previous week's high. So statistically for the NASDAQ, obviously the gap fill is tiny. It's only 6%. That's already been done during Globex. So similar gaps and opens, session highs get hit 63% of the time. We're very, very close to that anyway. Previous close pretty much all the time. Globex pretty much all the time as well. So there's not really any statistical advantages you can glean from today because there's not really any gaps or any movement in Globex that really gives us any advantage. So I would be watching these highs for rejection if we can get there today. It's very much the same as we had on the DAX. The DAX came straight down into those previous lows and bounced straight back off them. So again, moving to the upside, obviously, we'll see if we get that pushed down. More Swiss franc movement coming in, 125 ADR New Zealand dollar Swiss. We had that massive gap down on the Swissy, especially on the New Zealand dollar Swiss. That's now filled. So the Swiss franc is still strong at the moment. It's holding basically, and the Swiss franc will move with the Japanese yen, and obviously the yen has come down hard. Bouncing off 150 on the pound yen now, but they're all kind of stabilizing down here, so we'll probably get that pullback started. So that's kind of, apart from the US is coming down hard. So going to be an interesting week this week. So we'll see where we go. NASDAQ watching this high. So you've got 3 bull candles back to back here. So that there, that there, and that there. These are all closing within 20% of their highs, meaning we are bullish. We are bullish straight into resistance though. So we'll watch what happens and what sort of reaction we get at Friday's high, which is also last week's high, the previous session high, daily high, and that is also last week's high as well. There. So we'll watch that level potentially for shorts. If we do get a decent bounce out of that sort of area. New Zealand US ADR. So again, going up, US dollar coming down. So if we do get back up into that area and we reject last week's high and we can't get through that high, we'll obviously be looking for targets to the downside, which you may even come back down and test the Globex lows and put in a bear day today. So the current market looks on the NASDAQ. Obviously, that is where we opened. So at the moment on the NASDAQ, if we're going to do that, you're going to find a wick and then obviously pushed back down into those lows. So a rejection candle at the highs. So you've got plenty of room if we're going to go bear today to the downside, but we'll see where we go. I'm not going to go through all the pairs because I did that this morning in the members stream, but if there's any pairs specifically you want me to have a look at, let me know. I've just closed out this afternoon as well. I've just closed out S&P. Oh, and I've closed out the DAX. Okay. So for those members that were in the stream this morning, I said I was long DAX and long S&P 500. So DAX is closed out with 0.5%. So that was the entry there. I've closed it at the gap fill. Thought I had my target up there. I obviously had my target at a different position. So that I've closed out the DAX long. And the S&P 500 has just shut as well. Yeah, gap fill. So that was the gap fill on the S&P. So I've closed out. So I'm out of my indices trades. So I'm flat indices from a position trading perspective now. Entry was back down here on the S&P. It's just a single as well. Up to the gap. Okay, so watch this high rejection and see. We obviously got a lot of bulls coming in. So morning, afternoon, even Fletch, sleepy. Are you short gold? Yep. Afternoon, Yotko. Was check. You've retracted your message. I can't see what it was. I'm just going to cover this long on the NASDAQ. There's no point in risking this today. I've banked nicely today on gold. So this is going to be a rejection at the highs. I'm just going to get out of break even on the long. Two things are going to happen here. We are bullish. We're just going to pull back and continue. Or bulls are just going to stall out at the highs and we're going to come and test previous lows. Always be thinking when you're looking at any intraday chart, what am I going to get on a daily candlestick? When my platform decides to update, there we go. So always think, what's the daily candlestick look like at the moment? So if we're going to get rejection at last week's high, we're going to put in a bear candle potentially. So we may be looking at something along this lines. Yeah. So we'll have a wick. And then if we can't get through that high, we're going to test that high. 91% of the time, we will take out the previous day's high or the previous day's low on the indices, which means that if we push up and we can't take out the previous high, there's a 91% chance we'll take the previous low, which means your short has got a lot of room. If, obviously. Okay, so there's your first rejection bar on the bar 4 there, which is 20-minute candle. So ORB target today is up here. So that's 2R on the break of the 5-minute ORB. That's 2R. So we've got to get through there to get to target. So if this is not going to let us through today, it's either going to come back and go, in which case then that's the wrong thing to do, move to break even. But obviously the stop was down here somewhere. If this is going to be an upside rejection today and we're going to fail, we'll get on the short. See if it breaks. So I was just watching the news regarding the Carney thing. So basically the tariffs are being upped on Canada. So if you look at the Canadian pairs today, obviously Trump's announced that he's going to potentially put 100% tariffs on Canada, basically. So that's negative Canada. So obviously everything's rallying against the CAD at the moment. Obviously we've got a gap up there. So at the minute, there's EuroCAD, very negative for the Canadian dollar, obviously, if that is going to happen. So gap down on the CAD yen, gap down on CAD Swiss. So if that tariff does come into play because they've done the deal with China, we could see continued weakness in the Canadian dollar, which will be more and more CAD slipping away from the US dollar. The US dollar and the CAD tend to move together. Both oil exporters, obviously doing a lot of energy deals into country, but it's slipping the other way now, whereas Canada's trying to segregate itself from the US, become less dependent. So it's doing deals elsewhere, which is what everyone's got to do because Trump's torn up the rule book. But what that means is doing deals with China means that doing deals with the US will be twice as expensive for them. So we'll have to wait and see what happens. Trump's obviously renowned for saying one thing and then doing another. He likes to scare people. So we'll see what happens with it. But keeping a close eye on that, because this could any second just retrace that 225 ADR that we're down, could retrace straight back up. All of these CAD pairs could just correct. But we've got three things happening at the moment. We've got massive intervention in the Japanese yen. We've got the dollar weakening, the Canadian getting gapped, and the Swiss franc rallying. It's more than three things, but the Swiss franc rallying off the back of the Japanese move as well. So everyone's putting money in safe havens, which is in gold, Swiss franc, while they are trying to figure out what the hell is going on with Trump's latest move. So big moves on the Swiss franc. But again, just takes one word from Trump, we're back to where we were. So those V-shaped recoveries potentially coming in. So really hard to call at the moment what's going on. It's all a bit of a mess out there, isn't it? Okay, so there's last week's high being tested at the moment. We are just tapping into that. So ORB long, this is a critical level. Got to get through this previous high. One bear candle so far today, that's it. Gold's rallying again. So again, US dollar dropping at the open, helping gold on its way. This is your reversal alert today. Yeah, so we put a new high in today. That's the last bear move before that high was created. We got a wick that broke down after it. So this area here is your support, which is this propulsion move. So if we break that today, that's kind of your very ugly M-pan, but that is your reversal potential. So we're just waiting for someone to put a big profit take on these gold moves and just sort of kickstart this market like we've had before. We've had attempts at this gold reversal that just don't seem to stick at the moment. So, but this is ridiculous, isn't it? Divergence everywhere. Just goes to show how little you can trust divergence. You know, bearish divergence there. It's not bearish divergence, but we've got bearish divergence again intra-week. So, you know, it's got to go at some point, and when it does, it's going to be a big one. We looked at Bitcoin this morning. We got a Bitcoin chart up before the Bitcoin pump. We looked at the similarities between this and Bitcoin. Very, very similar. Except obviously Bitcoin's just artificially pumped. But, you know, this is a bubble. Tech bubble, .com bubble, Bitcoin bubble, gold bubble. Okay, so we've got more upside rejection on the 25-minute candle. We are putting in higher highs, higher lows, though, still bullish. Not being able to get through this level very easily, though. So if this does break, we'll probably get a pop through there. There's a lot of orders trying to push this back down at the minute from last week, from Friday. So risk reward, if this upside fails today, risk reward testing the Globex low, previous session, previous daily, you're looking at somewhere about an 8R. So very nice potential reward if it does fail at the highs, but looks like it's getting through. Aussie dollar CAD monthly range, 150% of the Aussie dollar CAD monthly range has just been done. We got a lot. Sorry, is that Aussie CAD? Yeah, 150. Yeah, so a lot of Australian dollar strength. Silver just hit its monthly range again. Look at that. New highs. Look at that move. I mean, what do you do with it? No one on their right mind is buying this up here. unless they know something that we don't. But look at the size of that weekly candle. I mean, every single week, normal price action, little bit of a rally. That move there started it back in November. We've had 1 week where we have not been bull. We've moved from, where are we? July 25. So in the last 6 months, we've gone from $39 or $40 an ounce to $112 an ounce on silver. 3 times the price. I mean, it just doesn't happen, does it? Look at it. It's nuts. But trying to pick the top, hard. Very, very, very hard. Yeah, but with that rally there, look, into 2010, that was a big rally. Look at that. And then we had a bear market for like 1, 2, 3, 4 years, stabilized for 3 years, 2-year rally, 3-year stabilization. What is that? It's almost like somebody somewhere knows that we've run out of silver, we've run out of gold. There's someone in the mining industry right now going, we ain't got any more. That's it. You've dug it all up. That's it. No, there's no more. There might be some under the sea, but we can't find that. There might be some up in space, but we haven't gone there yet. So that's it. We're out. Oh, right. Okay. So how much have you got? All of it? Nuts. Absolutely nuts. So new all-time highs again today. 6 days solid. Straight up. Okay, so 30-minute range is in. So this is your first TPO candle, the first 30-minute range in now. So bull 30 minutes. So this is quite often where we start to see potential reversals starting to kick in. So candle 6 there, which is your 30-minute candle. If we get an inside bar on this, that's a nice little short. Got 4 minutes left on this candle, but if this starts to go inside bar or we start to see some bearish price action, it's a good opportunity to get in. Now compare with the silver ramp. I've just done that. Yeah, I mean, it's crazy, isn't it? It's just crazy. It is literally like a rocket taking off. They're pretty much the same, aren't they? But silver's just been faster, look. So silver, you can see that's the rate of ascension on gold. Silver started later and went fast, obviously went faster because it got to the same level. But yeah, if you'd have known last year, you'd have just bought gold, wouldn't you? Just buy it. Keep buying it. This is what time machines are invented for. This is why we need time machines, time travel. The first people that discover time travel, the first thing they're going to do is go back in time, find pumps like this, and they're just going to buy it. And they're going to become quadrillionaires or whatever the biggest number on the planet is you can have in money. That's going to be them, isn't it? Only we'd known. Never mind. Okay, so got 2.5 minutes, halfway through this 5 minutes. We're looking at the moment like inside bar formation. Still got a bit of time to go. Aussie US new highs. Got that gap fill to do. They are really not liking the dollar today, are they? Carney's talking at the moment as well. Some of Trump's recent comments should be viewed in the context of the USMCA review. New Zealand dollar CAD. ADR. So Canadian dollar coming down as well with the dollar. Okay, so 1 minute chart, you've got symmetrical triangle formation. So there's a nice short there forming. Obviously, if you want to wait for confirmation on that being a 3-bar reversal, you wait for the next candle to close bear below that low or below that low. That'll be a short. If you want to get in aggressively, just hit the button. If this is going to be a 3-bar reversal, we will not take that high out. If this closes bull in the next 30 seconds, probabilities drop a little bit. Okay. I'm just going to, not a very good risk reward, but I'm just taking a partial there. Break even on the ORB, just because we are stalling here. So if this is the turning point, might as well get as much profit out of it as possible today. So there's your short possibility. So sell under 7, stop above 6. So if this is going to be a 3-bar reversal, not a very convincing push, is it? But that is definitely a pause. And if we are going to pull, we should ideally put a lower high in than 7 and then break 7's low. But definitely want a lower high than 6. So that's the trade idea there underneath 7. So yes, we were talking as well this morning about the Australian dollar. Obviously, the Australian dollar and the New Zealand dollar are both commodity pairs. So they will both rally with gold. So when gold starts to cool off and reverse, the Australian dollar will also do that. So there is a catalyst coming, obviously, on Wednesday, which may well drive that Australian dollar through the floor. And if that happens, that will put some pressure on gold because they make a lot of gold. They mine a lot of gold in Australia. So it's a big export for them. And if that starts to reduce the Australian dollar, that will reduce the gold price because they sell gold. So you might find that that becomes the catalyst. But I think it's more likely that we need some people to start selling gold before it cools off the Australian dollar rather than the other way around. But wait and see. Okay, so we've got higher high gone in. We are still holding candle 6's high though. That's your 30-minute range. Okay, I'm just going to wait for this candle to close. So if you want to get, if you're thinking of an aggressive short at previous highs, that's it. You can hit the button right now with that sort of stop on it. You've got plenty of room. Obviously, you need to be aware of the moving averages coming down as well. We may get a bounce if it's a continuation. Obviously, we tend to use moving averages for support. If you want to be more conservative, like I am this morning, this afternoon, we're putting in a higher high and a higher low at the moment. So I want to see some bearish price action before I get interested in this. I don't really want to take it long at resistance. If we break that, then I will look for a pullback to get in long. but I'd much rather try and grab the highs today if we can, but let's see. Again, bulls holding. So we've got this, that was your high today, that was your climax today. And obviously we had a lovely big strong pullback, which then basically created this propulsion gap. They've resold that continuously for the rest of this morning. This is us retesting this. So if that is going to be our high of the day on gold and we're going to struggle to get through it, that will likely be because we're getting some strength coming into the US dollar. Strength coming into the US dollar will tend to turn the indices back down the other way. So this is what we're seeing, all of this happening in conjunction at the minute. We need some proper confirmation. Obviously, the last time we tried to sell off, we failed. So all higher highs gone in up until that point, all higher lows gone in up until that point. Now we've got a symmetrical triangle break and a 3-bar reversal forming. So you'll be looking to push back down into this propulsion gap, potentially. If the bears can get control, which they are. Short that. So there's your 3-bar reversal. Push, pause, pull. And if obviously that is going to hold, we won't invalidate candle 6. Shouldn't do. But if this is just an accumulation or a flag, then obviously we'll break straight up. So out of that long, obviously, on the ORB with a break even on the rest. So it's either going to bounce or drop. Can't do anything else, can it? Up or down. Aussie US. Just watching my drawdown on the Aussie US, which is why I know what it's doing. Stalling out as well, up at the highs. So we got some strength coming through in the dollar, which you would expect because we are getting extended now on these. US dollar CAD starting to tick over. US dollar Swiss starting to very gradually starting, not looking very strong at all though. We've already had a bit of a pullback on the yens. Pound's very strong as well. Okay, so that was your last bear move. So this is your reversal alert, basically. So to validate this short, we need the bears here to regain control. And as you can see, they're struggling. So this could well just turn into a flag break long. Euro New Zealand. Gold new highs, 150 ADR. Sorry, silver. Silver. I'll come back to that in a sec. 6. So we've just beaten Friday. So Friday was the biggest day in silver we've had. For, as you can see, for a long time. We've just beaten that. Never seen anything like this move on metals. It's mental. You're in New Zealand. So yeah, obviously big sell-off against the New Zealand dollar. Bullishness on the New Zealand dollar. Very extended now, though. We're down below 20 on the daily. So don't get there very often When you do, you tend to get a correction. Yeah, so looking like a good area to start buying from. You're also down near the 200 moving average on this at the minute. So this is due a correction. So we had the reversal alert went in there. We didn't get back to retest it because this propulsion gap, they held that and sold into that. So be looking for a pullback probably into the last monthly levels. So your December and November lows. This is your previous support. So you'll be looking for a pullback into support up there. So about 200 ADR to the upside potentially on this. Nicely extended on the 4 hour. So these levels here, that propulsion gap, 50% retracement roughly. But yeah, it's accumulating over the last couple of days. Euro's got nothing going for it, basically. So what you're looking at here is basically the New Zealand dollar. So the euro is neutral. Interest rates and inflation are at levels they want to be at. They're at target. So there's no reason to be bullish. There's no reason to be bearish on the euro, unless tariffs get applied, which obviously they did last week. So euro's dropping, but the New Zealand dollar and the Australian dollar will be rallying with commodities markets. And as we know, they are parabolic. So this will come back when the commodities markets come back. But your guess is as good as mine on that one. Okay, so we've got rejection. So potentially you've got a flag break long. Or we might go into an accumulation here. So the other thing we could be looking at here is an uneven M pattern reversal. So you've got your pullback, then we'll take out the high, and then we'll reverse from the high. So sort of a micro head and shoulders sort of pattern. We could put in a lower shoulder, or we could put in a higher shoulder on the M pattern. But we'd probably want to see at least them test this area on a pullback today, even if they're going to go into new highs. Market seems really, really undecided about what to do with this dollar at the minute. It was rallying. We were kind of starting to make a little bit of progress from this, weren't we? We were sort of looking like we were getting there. And then he opens his mouth again. It's almost like he's got a death wish for the dollar. It's unbelievable. Someone to come into power and to do that to your own currency. It's apart from obviously we've had people in the UK do that, haven't we? Lettuce. Anyway, yeah, but it's it was starting to look like we were going to get some dollar strength, but he screwed that. That's unbelievable. I've got 6 short on this. Averaged in at 68,361. Averaged in at 175 ADR, basically. Looking for a push back down into propulsion. But if it gets into that one, I will take off some of this because with the way the markets are going in commodities at the moment, you just see RSI sitting up at 90 sideways. Doesn't really happen, does it? But believe anything this year. Okay, so we got lower low and lower high gone in, but obviously massive bull candle. So bullish rejection out of this last batch of sellers. So they've rebought this. So looking like it's probably going to break high. So the ORB continuation. So opening range breakout, if you're trading that up into resistance, your next resistance is here. Can't quite see it, but it's behind that dashboard. There. So we're looking at 25, basically where we are now. Yeah, so stopped out on the short. So that is your next upside resistance. Slightly different on this terminal. What date was that? 15th of January. 16th of January, that's why. Different date. So you've got two levels to look at. Upside. So where we are now, these are the most recent, obviously. So that's your most recent, exactly where we are right now. And then we've got a little bit further up. Upside resistance. So uneven end pattern reversal would be that. But they've bought up this propulsion again. So these sellers that got beaten back again. I don't want to chase this long today. Already in the ORB, so I'll just stay in this, the rest of this. Okay, so that resistance doesn't look like we're holding that. So I'll be watching the 25,812 level. If you go up to higher time frame and scroll out, you can see the levels we've got coming up. So that's your upside resistance. That area is where we've sold. We've got that previous resistance here. So this whole area's got sellers in it. But, I mean, if you sold this, you're out, aren't you, really? You gap down, you got a gift there. So you'd be out of these down here. So this could run. But, again, we're going to need more weakness in the dollar, which isn't, isn't unusual at the minute, is it? Aussie US is coming back down from those new highs. So obviously, we are still obviously very, very high, new higher highs going in for the last couple of hours, but a little bit of rejection coming in, bit of strength. Look at how embedded this is. No weakness whatsoever in this at all. So gold has been holding all day. We had that initial rally for 3 hours at the beginning at the open. We couldn't get any further. So this is kind of like your control candle here. So we have not managed to close above the high of that. We have not managed to close below the low of that. So this is your kind of range at the minute that we are trading in. If we close below that, break that propulsion, get that reversal alert, we'll probably flush. As silver's done, if we break that high, your guess is as good as mine. I can't stop looking at it now I've seen it. Silver, it's unbelievable, isn't it? The monthly chart. January. Look at it. Normal month. Normal month. Normal month. Abnormal month. Abnormal month. I mean, look at this. You thought November was a big month. And then they put in December. And you thought December was a big month. What's February going to be like? And we're closing at the highs. We're closing at the monthly highs with a move that is immeasurable. 41,000 typical candle before was 4,000. It's 10 times the normal range we're putting in on this thing. Just phenomenal. But look at it from the other point of view. Yeah. When aeroplanes go up and they run out of oxygen, they then have come down quick. Imagine what a bear week is going to be like. Right, this is this Monday afternoon. This so far is Monday's price action. That was all of last week's price action from Monday to Friday. And this is Monday's price action. Yeah, this is exhaustion. It's got to be exhaustion. But if we're going to go bear, right, that was Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, this is Monday. If we're going to have a bear candle, we're going to come and test this area here. We're going to try and test that. It didn't even get to that, look, last time. But you got to look from a risk reward perspective. Even if you tried to get in short on this 10 times on a 15-minute chart, or 3 or 4 times on an hourly chart, you tried to get in and you got stopped out 3 or 4 times. The risk reward ratio on a short, if this is going to be a massive bear week, has got to be 20, 30 to 1. So from a mathematical perspective, screw it. Get it wrong 5 times. Who cares? When you get it right, it's going to be more than 5R. Just got to try and get it right. But I just cannot fathom who is buying this. Yeah. You know the old adage, sell high, buy low. Who the hell is buying this? Somebody somewhere knows something, don't they? You watch, we've run out of gold. We're going to have to make everything out of silver now. Someone's sitting on all this. Unbelievable. Blew my account shorting silver from 70. Oh, don't blame you. Who wouldn't? I mean, even that, you 70 was such a long time ago. Yeah, look at how 70's down here. Right, last time we were at 70, that was when the M pattern reversal went in on gold, and we were like, "This is it." Yeah, and then it did that. But 70 seems, if you look at this run here, it's half of that run. But it's only taken 1, 2, 3.5 weeks to get from 70 to 112. It's nearly doubled in price. It's just phenomenal. But, look at silver from I know RSI is kind of a little bit of a pinch of salt with this at the minute, but where we are, we've been here before. Yeah, we were roughly there, but look, it just accumulated. Yeah, roughly there. Yeah. It pushed up as RSI went down. So this is definitely exhaustion gap. As you can see, there's a gap there, but that's an exhaustion gap because it's just reaching for price. There's no volume. So that makes sense. That's divergence. That's why you get this pullback, because it can't be sustained. That was the last time we were there, and it just went sideways. Yeah. What's to stop this now doing this? And just waiting for those moving averages to catch up and catapult it further, I mean, it doesn't matter how many comparisons you use, what indicators you use. We don't get that far away from a moving average. Yeah, that's biggest move in history. Nuts. We had the biggest move in history previously. This was the biggest move in history. Now this is the biggest move in history. What's the next one? Just unbelievable, isn't it? But, all the trend traders now, you watch all the guys on YouTube pumping trend systems. I've got a brilliant system for gold. Yeah, let's have a look at it maybe the end of this year. It won't be a brilliant system by the end of this year, I can guarantee it. Okay, so we tap straight into resistance. There we go. And pulling back. So there's potential for another opportunity short here. That's a big rejection. So you could test the Globex highs there with a positive R. That's a 2R. You could test the previous close with a 2-ish R. Obviously, if this is going to reject the highs and we're going to put a bear candle in today, you've got an absolute cascade on your hands. I don't think we'll get down to those levels now. So I would probably, that's going to be tricky to get into now, testing this propulsion. So if this is an up leg, that at the moment is 2R to the downside, so it's worth taking. Decent stop on it as well. But potentially you're going to find this is just going to get bought back up again. So got 30 seconds left on this candle. It's a valid short. It's obviously still making highs, but that's what reversal trading is all about, getting picking the tops and bottoms, isn't it? We've gone straight into resistance, which is holding at the moment. So they are selling that previous high that I identified before. So we're selling this level here. So just moving my stop up. If this is going to be a reversal from here, we'll probably flip-flop around before we fly back up again. Or it could just be a 1-bar pullback. We've had 2 1-bar pullbacks so far. So this is either going to be a same again, 1-bar pullback, and we just go and make a new high. But either way, that should be safe if this is a 1-bar pullback. If it's going to be a sort of more M pattern type movement, it's going to be that. If it's just going to be an accumulation, we should still be safe under there. So just lock in the rest of that profit in. Holding in it. So this is still your last batch of buyers we couldn't get through. So watch this low, which is the open of candle 11. So if this becomes a propulsion gap, you should be safe sitting behind that propulsion gap if this is where the bear move is going to start from, in the same way as you were safe behind that propulsion gap long, and obviously that propulsion gap long. So if this is a propulsion gap short to the downside, you in effect should be able to sort of put a much tighter stop loss on that. But we've got 2 minutes left on this candle yet. We haven't formed a propulsion gap yet. They are rebuying this buy here at the moment. And 1-bar pullbacks. I don't trade these. I can't trade 1-bar pullbacks. I haven't got the confidence. I'm a mean reversion trader. I don't have the confidence when I do get into trend trades just to trade 1-bar pullbacks. I want to see more pullback, more value basically. These are really tricky. Problem with these is if you take 1 bar pullbacks and just buy it, you've got to have the confidence that the lows of these candles are going to hold, and most of the time they don't hold. So it's very difficult to put a stop loss somewhere. You've got to use propulsion, and then you get that large stop loss, which means it's only really possible to get 1-to-1s most of the time on them. They just don't work mathematically for me. There we go. There's your wick test. So that's the low of candle 11. So if these bears are trying to take control, we should hold this level and then break under candle 12 and 13. You're pretty safe for a short. And ideally you could use candle 13. So aggressive short, you can use the candle high there. More conservative, you want to be up here somewhere. Obviously we're selling into potential dynamic support at this propulsion gap. So you've got buyers here. Okay, gold is stalling. So new high just gone in on gold, obviously in the last hour, but we are, sorry, it's silver. Gold's doing the same. So gold's stalling along with silver. So very tiny propulsion gap there. Really small, but buyers were not able to take back all that ground. So short under these lows is potentially that move. But equally, all the trend traders are just buying the 1 bar pullbacks. Good indication of how trading is 50-50. Every time you look at a candlestick, it's got two meanings. It's either the bull's pulling back and buying up more, or it's the bears taking control and the bull's being beaten in this case. One of those two things is going to happen. Your decision as a trader is not where it's going necessarily, it's which side am I on? You pick a side. You're a bull or you're a bear, one or the other. So you either think, yeah, now's my time to be a bear, or yeah, that's exactly what I wanted as a bull for a pullback. Both of them have a 50-50 probability of being correct. But obviously, at the moment, we're in a bull market today. So looks like another 1 bar pullback, which again, I do not take. Wondering the amount of money needed to move all these candles across all the charts. That high. Well, up on gold and stuff, yeah. It's a $7 trillion a day market. So, I mean, I would say on things like the metals at the moment, to move this probably won't take a lot, because when you get these big candles, so this monthly move, for example, that we're looking at on gold and silver, yeah, to get a move of this magnitude up here, typically in a normal market, in a normal healthy market where you've got multiple participants taking part daily, you have roughly an equal amount of buyers and sellers, and the candlestick is basically the difference between the buyers and the sellers. So you open up here and everybody's zero, and if there's 200 million goes in long and 100 million goes in short, the candle will be bullish. Yeah. The bigger the candle, the more the imbalance in volume. So you may have here 200 million long, in the same as you had 200 million short there, and you had 100 million short there and 200 million long. But here, because the candle is sort of twice the size, you may have only had 50 million shorts, which caused that. Here, you could have 200 million long. And the reason this has gone so high is because we've only had 10 million short, because there's no one to sell it. If you are a buyer and there's nobody willing to sell to you, you have to move your price up further to find somebody that will want to sell you. So the spacing between the orders gets bigger, therefore you slip more, which is what we call slippage, into a higher price bracket. And this is what this is. And this move typically is what we call exhaustion. When you find a move go parabolic, it will 9 times out of 10 end with an exhaustion. That exhaustion is one of 2 candlestick patterns. It's either a shooting star or a hammer, or it is a large bearish engulfing or bullish engulfing. Yeah, that's typically what happens. Or the other alternative is you get a large exhaustion followed by indecision, followed by reversal. Yeah, so this is the bulls pushing up, not able to get any higher, and then the bears confirming control, which makes all these bulls sell, which creates a 3-bar reversal. That is a reversal pattern. This is an exhaustion candle. That was an exhaustion candle, followed by an indecision, which is a symmetrical triangle on lower time frames, but we broke to the upside instead of the downside. If it had broken to the downside, it would have become a 3-bar reversal, in which case then that would have sold off very hard, but it didn't. But look at the size of this. Who is up here selling to these people at these prices? It's supply and demand driven. Yeah. If you've got stocks of silver right now, you're sitting there going, bring it on. But you're going to run out. When there's no silver left to buy, it has to come down. Because everyone will start selling everything you bought, you sell it. I have no idea who's buying it up here. I've been trading 18 years. I've never seen a move like this on anything. Bitcoin I have, but Bitcoin's just meh. Nonsense. But this is a commodity. This is something that has been traded for centuries. Just doesn't happen. 2010 crash. Yeah, that was 2010's crash. What is this? This is where Trump got in. There, right? And the dollar weakened. Yeah, so don't forget this is a dollar cross as well. But this is not the dollar weakening, is it? This is some crazy run for the hills into metal. I just love looking at it every day, because you look at it every day and you think, nah, it can't. Yeah, it does. Nah, it can't. Yeah, it does. No, it definitely won't do now. Yeah. Absolutely balmy. I was saying in the member stream this morning, I went into a jeweller's this weekend to talk to the jewellers about a sort of ring resizing and saying what's happening with gold, and they're not buying any anymore. They won't buy it at that price. So, I mean, that's obviously low level. That's jewellers. But, they've got so much gold. Everybody has been selling gold for the last year. Everyone's just coming in going, got a load of gold, got a load of gold, got a load of gold. Because it's the best time to sell gold. If you've got gold, sell it now. Yeah. But they're not buying anymore. So if they're not buying anymore, that means you can't sell it. So what will happen in my town, for example, is you'll walk around all the jewellers going, I've got a load of gold to buy, to sell. And they'll go, nah. Or they'll go, I'll give you whatever for it. I'll give you 2,500 an ounce for it. And you'll go, well, no, it's 5,000. You go, yeah, but I don't want it. I've got tons of the stuff. So you won't be able to sell your gold anymore. And then they will start manufacturing with it and the supply will drop. That makes prices go back up again. So it's just, just no way of formulating a plan for it. You either get in, hold on tight and get it right or wrong, or you just stay out of it. But there's no precedent. And that's the thing we look for in trading. We look for patterns. There is no pattern. The only pattern you can look at, the last week, the only thing you can look at is what we got here. So I'm looking for this, but I'm certainly not looking for that. I'm looking for, if I can get down to there, happy days. That's going to make me a very nice profit. But I wouldn't want to take a risk on what I think is more likely to happen, which is that, because that means holding long term. If I tell you what I would do, how I would hold it long term, my average is in was it 48.93? Yeah, 48.93. So my average is in there. Yeah, if, for example, it did that in 24 hours, yeah, and it put me down here somewhere and closed down there, I would be happy to close out the top two and the bottom two and take that profit and hold the rest of it and just see what happens. And as soon as it gets down to these moving averages, or even hold the whole lot, actually, if it got down to here and undid that 24-hour rally, move the whole lot to break even and hope that we get a bear candle followed by a bear candle. Yeah, we don't pull back 50% on that bear candle, which will keep me in the position. But these moving averages, I wouldn't want to trust that it's going to get too far past those. But if it does, it's going to be one of those trades where it makes you a year. It's almost like I got into the market in January. I got out of the market in January and I stopped for the year because I didn't need to trade anymore. It's one of those types of trades. It's not a life-changing trade, but it's an opportunity that doesn't come along very often, this type of movement. But look historically at every type of movement you've ever seen that's done something like this. Oil, we've got a comparison on oil. Yeah? Ukraine war. 100% retracement. Yeah? Worst case scenario, 50% retracement in 3 weeks. The whole lot. Yeah? Months and months and months. 50% retracement in 3 weeks. Imagine that happening. Wherever you want to start the move from. There. Yeah. You're looking at $800 coming off price. Or if you're super brave, and that's where you think the move started from 18 months ago, you're looking at a retracement back down into here. Huge, huge potential. Okay, so that one bar pullback failed, but also the bears failed to take control as well. We couldn't break through 12 and 13. We closed on the lows, and now we're putting an inside, well, we were putting an inside bar in, we're not anymore. So this is your potential M pattern reversal. However, it's not holding. So we need to break this 12-13 low. But this looks like a flag break again. Fighting the trend today. Shouldn't really be fighting the trend, should I, in a market like this? It's parabolic. So it's probably not the best thing to do. But then again, I've got a long on as well. So just kind of playing today. Okay, so there's that high gone again. So next stop is 25.812. And if that fails, which is these highs kind of here, we've got loads of tests on this high here, this area. Failing that, obviously this high here and this high here forms your biggest upside resistance. But we've got an interim coming here, which is that size. So that's a good short area. So is that. That's failing. And so is that one. So we'll see. So if this one fails, so again, 3-bar reversal pattern, push, pause. We shouldn't break that high if we are going to pull for the next 30 minutes, but it doesn't look like we are. So inside bar if we get an inside bar, which we got 11 minutes left, so another 2 5-minute candles after the one we're in at the moment. If we form an inside bar there, again, it is a brick wall. We're hitting an iceberg. So there is potential for that reversal to pull back into, at least into propulsion, and then market structure continue back up into this area here. But if it wants to go parabolic up into there, that's where I'll look for shorts. And then obviously big move down into this propulsion gap. Propulsion gaps are what we target, because propulsion gaps are what the market continuously just comes and fills. Every time you get a propulsion gap, market comes back and gets it. So that's your downside target when you get short. Obviously, we got this massive one from last week, but again, that's a Trump announcement. US dollar Swiss monthly range gone. We are on the 26th, so these monthly ranges now starting to fall, but obviously that is because we're getting on a bit in the month. So that obviously gap down on the Swiss franc. Is this more Swiss franc buying? Yeah, it's more Swiss franc buying. So people running to the safe havens at the moment. Just checking the news feed, see if there's anything come out. So NATO basically agreeing that they should do more on Greenland. So Trump won. So basically NATO now looking at agreed paths to do a bit more defense on Greenland, basically. So Trump can't have it, but it's going to cost the rest of the world to do it. Got to give it to him. He does tend to win a lot, doesn't he? Okay, so CAD Swiss coming down. More money running into the safe havens. So potentially we're going to get some yen strength, maybe. No, not at the moment. Okay, so higher low going in there. So that is basically they're rebuying this area. Got broken. So we're either going to go into an accumulation here at the highs, and then obviously it could go either way, but it will probably take out those highs. So I don't think that trade will hold up. So if we are going to break long, those are your short targets to the upside. So you've got two short targets up there where the market will find resistance. So you've got lovely propulsion gaps there to target on the 5-minute, 15-minute, they're bigger, obviously. So that will be a good short today. 350. So I'm not sure you'll get there today. Might do. Be like that. So this is the sort of thing we're looking at today, and then a big boom straight back down, fill it. But that distance there is obviously about an ADR. So it's 1407. ADR is ADR is 341 actually. Yeah. So there's 1700, 170 points. So there's plenty of room to fill that today from there. There's actually, if we were to get all the way up into there today, that is within ADR as well. That is 413. So that is over ADR. So you're looking at about 125% of ADR to get up into here today, which will obviously mean that the market is likely to get exhausted. So shorts out of there. If you want to take a position trade on this, an intraday position trade, short it somewhere in here when you see bear price action, have a backup short in there, average yourself in there, and then you can get out when it pulls back. Stopped out. So ORB long still going. I mean, it's this area here is obviously our support. So target on the long. So 25,813 upside. 25,865 I've got marked there, which is somewhere around there. So if you're long on the ORB still, I've got a quarter of mine on. Get out somewhere up there. Expect some retracement. Nuts today, isn't it? It's holding. So this is the end of this hourly candle. We got 7 minutes left. You know, it's looking like a bit of a wedge. If you look at this on lower time frame, sorry, this is a 30-minute chart, but actually, no, it's not really, is it? It's range. Which way is it going to go? I just can't believe it's going to go up anymore. We've still got, how many days we got left? So where are we? 26, 27, 28, 29, 30. So we've got 4 trading days left this month. So we've got 4 days. Obviously we're closing at the high. If we're closing, we're closing within 5% of the highs here. If we close within 10, 20% of the highs, it's deemed a strong close. You'd tend to see bullish continuation. So, can we get 5 bull days like we did last week? So last week was literally 5 bull days, higher highs, higher lows every single day. We've opened up higher high, higher low. Where are we going to go? We've got one this week, basically. So chances of putting in a candle that big, obviously you'd have to say are minimal. But if we do, you're looking at hitting 5,400 potentially as upside this week. I would never say I'd see it, but so Fed basically is going to be the thing that is going to, I think, either stop this gold move in its tracks or power it up. If that comes out, I mean, it's not going to happen, but if they did come out with a 3.5, obviously, see you later, dollar. But if they say 3.75, we're having 1 drop this year, which is what the forecast potentially is, we'll probably stay where we are. If they come out and say we might see 2 drops this year in the statement or the press conference, that gold move is going to get powered up. If they come out and say we can't see any drops coming because inflation is sticky, that will be the catalyst. So Wednesday, we might see rallies into Wednesday. So you might see a midweek reversal this week. Certainly not stopping, is it? Interesting times, to say the least, isn't it? But anyway, no precedent. So I'm going to stop shorting this because it's not working. I'll be looking for shorts up there. 3R trade is all you need, basically. If well, for me anyway, to get those shorts back, I need a 3R, which is easy to get. So just looking for some kind of decent short order up here. If I can get a short in there, if I could click on buttons, if I can get a short in at those highs somewhere around there with a stop somewhere up there, even targeting the top of that propulsion gap gives me 3.36. Aussie New Zealand ADR. Okay, Aussie New Zealand ADR to the downside. That's got to be New Zealand dollar strength. Aussie dollar weakness. No, New Zealand dollar strength, I would say. It's actually a mix of the two. But that's definitely a strong New Zealand dollar. So yeah, so trade up there, potentially. So if we're going to come back down and retest propulsion here, even if we just hold like this, but retest this area, which we should do, that is a very nice 3R short if it just blows through there without giving us any bearish price action, obviously you can look at the next propulsion move, or rather the next resistance area to the upside for a short. That gives you something like a 4-5R back down into propulsion, but that is unlikely to happen today. So that is sort of going to be an overnight hold, which obviously going to cost you some swaps, but there is potential for that. Holding overnight at the moment, I think, is very risky with indices because of what's going on at the moment everywhere. We are getting some fairly decent gaps. And obviously, if you look at some of the gap sizes we've had, like that, if you're holding this the wrong way and you get that, your stops get triggered at 3-4 times your risk. So holding overnight is dangerous with Trump on board. So basically, don't hold overnight for the next 3 years if you last that long. So yeah, that's where I'm watching up there, and I'll see if I can get a short in. But anyway, down into those moving averages will be a decent short if we get there. I'll leave it there today. I'll be back on Friday. So Friday morning for the DAX session, and then Friday afternoon for members. I'll keep updating in the Discord group about what's going on with gold and stuff, but I'm keeping a very close eye on this because of my shorts. Aussie US has just rallied into new highs. There you go. New highs just gone in. Drawdown's gone up to 2.16. I'm monitoring the Aussie strength basically based on my Aussie US trade. Yeah, that gold is the thing that is what is permanently on my radar at the minute. So I'm going to have that sitting up here on another monitor, just so I can keep an eye. But yeah, I'll update in Discord, obviously in the members group as well, about anything that I'm doing. If you need anything, let me know. I'll be Discord or Telegram, and I'll be back on Friday. So have a good week, and fingers crossed, get some gold. See you next time.
Click, clack, charts attack, candlesticks, they spark the track. Lead move silent, market crack. Profit stack, no turning back. Opening range, that's the game. Breakout hits, never the same. Algorithms play, but he rewires the frame. Banks whisper his name. Flipping forex, indices flex. Numbers dance, what's coming next? Green lights flash, P&L stretch. Risk managed, he never sweats. West fact buzz and traders peep. Lessons deep, no time to sleep. Market's a beast, Lee's got the leash. Feast at the feast, his game's elite. Market structures is domain. Leads the king, they know his name. Breakout sharp, he fuels the flame. Trading charts is not a game. Pip by pip, he stacking high. Mean reversion, banks comply. Leads the reason markets run. Leads the reason markets run. Candles lit, wicks on fire, spread so tight the stakes get higher. Institutional flow, he's the supplier. Positions held till charts retire. Data feeds, news he reads, Fibonacci maps to see. Supply demand his mind exceeds. Trades ignite like lightning speed. Stop loss tight, take profit wide.